Behold, the beauty that is Indonesia, Mother Nature's gift of serene and colorful landscapes, where diversity makes us one, united towards a common goal, where resiliency is achieved together. A strong infrastructure governance arising, where investments are waiting to flourish, and where creativity is inspired by tradition. Indonesia, where beautiful possibilities are offered.
Indonesia, a land of breathtaking nature and rich culture. There are many things Indonesians are proud of. One-of-a-kind photogenic spots spread all over the nation, unique wildlife, magnificent cultural heritage, and the most recent one, the G20 presidency. Indonesia is proud to hold the 2022 G20 presidency. As a multilateral forum connecting the world's major economies, the G20 holds a strategic role in securing global economic growth and stability. Together, the G20 members represent more than 80% of world GDP, 75% of international trade, and 60% of the world population. And 2022 is the year that Indonesia plays a major role in leading the G20 discussions on various global issues. Not an easy task amid a global pandemic that still continues after more than 2 years. Holding the presidency in this unique moment where countries are struggling to bounce back from COVID-19, Indonesia introduces Recover Together, Recover Stronger as the main theme of its presidency. As a step toward an even, sustainable recovery, 6 priority agendas are introduced in the finance track. Exit strategy to support recovery, addressing scarring effect to secure future growth, payment systems in the digital era, sustainable finance, digital financial inclusion, and international taxation. Through these agendas, the Indonesian presidency aims to engage all G20 members and invitees in discussions and deliberations that goes beyond just the interest of advanced economies. Considerations also need to be put for other countries that may still be struggling to manage the pandemic. Because coming out of the pandemic, no one should be left behind. Recover together, recover stronger.
Behold, the beauty that is Indonesia, Mother Nature's gift of serene and colorful landscapes, where diversity makes us one, united towards a common goal, where resiliency is achieved together. A strong infrastructure governance arising, where investments are waiting to flourish, and where creativity is inspired by tradition. Indonesia, where beautiful possibilities are offered.
Indonesia, a land of breathtaking nature and rich culture. There are many things Indonesians are proud of. One-of-a-kind photogenic spots spread all over the nation, unique wildlife, magnificent cultural heritage, and the most recent one, the G20 presidency. Indonesia is proud to hold the 2022 G20 presidency. As a multilateral forum connecting the world's major economies, 70% of world GDP, 75% of international trade, and 60% of the world population. And 2022 is the year that Indonesia plays a major role in leading the G20 discussions on various global issues. Not an easy task amid a global pandemic that still continues after more than 2 years. Holding the presidency in this unique moment where countries are struggling to bounce back from COVID-19, Indonesia introduces Recover Together, Recover Stronger as the main theme of its presidency. As a step toward an even, sustainable recovery, 6 priority agendas are introduced in the finance track. Exit strategy to support recovery, addressing scarring effect to secure future growth, payment systems in the digital era, sustainable finance, digital financial inclusion, and international taxation. Through these agendas, the Indonesian presidency aims to engage all G20 members and invitees in discussions and deliberations that goes beyond just the interest of advanced economies. Considerations also need to be put for other countries that may still be struggling to manage the pandemic. No one should be left behind. Recover together, recover stronger.
Behold, the beauty that is Indonesia, Mother Nature's gift of serene and colorful landscapes, where diversity makes us one, united towards a common goal, where resiliency is achieved together. A strong infrastructure governance arising, where investments are waiting to flourish, and where creativity is inspired by tradition. Indonesia, where beautiful possibilities are offered.
Indonesia, a land of breathtaking nature and rich culture. There are many things Indonesians are proud of. One-of-a-kind photogenic spots spread all over the nation, unique wildlife, magnificent cultural heritage, and the most recent one, the G20 presidency. Indonesia is proud to hold the 2022 G20 presidency. As a multilateral forum connecting the world's major economies, the G20 holds a strategic role in securing global economic growth and stability. Together, the G20 members represent more than 80% of world GDP, 75% of international trade, and 60% of the world population. And 2022 is the year that Indonesia plays a major role in leading the G20 discussions on various global issues. Not an easy task amid a global pandemic that still continues after more than 2 years. Holding the presidency in this unique moment where countries are struggling to bounce back from COVID-19, Indonesia introduces Recover Together, Recover Stronger as the main theme of its presidency. As a step toward an even, sustainable recovery, 6 priority agendas are introduced in the finance track. Exit strategy to support recovery, addressing scarring effect to secure future growth, payment systems in the digital era, sustainable finance, digital financial inclusion, and international taxation. Through these agendas, the Indonesian presidency aims to engage all G20 members and invitees in discussions and deliberations that goes beyond just the interest of advanced economies. Considerations also need to be put for other countries that may still be struggling to manage the pandemic. Because coming out of the pandemic, no one should be left behind. Recover together, recover stronger.
Behold, the beauty that is Indonesia, Mother Nature's gift of serene and colorful landscapes. Where diversity makes us one, united towards a common goal. Where resiliency is achieved together. A strong infrastructure governance arising, where investments are waiting to flourish, and where creativity is inspired by tradition. Indonesia, where beautiful possibilities are offered.
Indonesia, a land of breathtaking nature and rich culture. There are many things Indonesians are proud of. One-of-a-kind photogenic spots spread all over the nation, unique wildlife, magnificent cultural heritage, and the most recent one, the G20 presidency. Indonesia is proud to hold the 2022 G20 presidency. As a multilateral forum connecting the world's major economies, the G20 holds a strategic role in securing global economic growth and stability. Together, the G20 members represent more than 80% of world GDP, 75% of international trade, and 60% of the world population. And 2022 is the year that Indonesia plays a major role in leading the G20 discussions on various global issues. Not an easy task amid a global pandemic that still continues after more than 2 years. Holding the presidency in this unique moment where countries are struggling to bounce back from COVID-19, Indonesia introduces Recover Together, Recover Stronger as the main theme of its presidency. As a step toward an even, sustainable recovery, 6 priority agendas are introduced in the finance track. Exit strategy to support recovery, addressing scarring effect to secure future growth, payment systems in the digital era, sustainable finance, digital financial inclusion, and international taxation. Through these agendas, the Indonesian presidency aims to engage all G20 members and invitees in discussions and deliberations that goes beyond just the interest of advanced economies. Considerations also need to be put for other countries that may still be struggling to manage the pandemic. Because coming out of the pandemic, no one should be left behind. Recover together, recover stronger.
Behold, the beauty that is Indonesia. Mother Nature's gift of serene and colorful landscapes. Where diversity makes us one, united towards a common goal. Where resiliency is achieved together. A strong infrastructure governance arising, where investments are waiting to flourish, and where creativity is inspired by tradition. Indonesia, where beautiful possibilities are offered.
Indonesia, a land of breathtaking nature and rich culture. There are many things Indonesians are proud of. One-of-a-kind photogenic spots spread all over the nation, unique wildlife, magnificent cultural heritage, and the most recent one, the G20 presidency. Indonesia is proud to hold the 2022 G20 presidency. As a multilateral forum connecting the world's major economies, the G20 holds a strategic role in securing global economic growth and stability. Together, the G20 members represent more than 80% of world GDP, 75% of international trade, and 60% of the world population. And 2022 is the year that Indonesia plays a major role in leading the G20 discussions on various global issues. Not an easy task amid a global pandemic that still continues after more than 2 years. Holding the presidency in this unique moment where countries are struggling to bounce back from COVID-19, Indonesia introduces Recover Together, Recover Stronger as the main theme of its presidency. As a step toward an even, sustainable recovery, 6 priority agendas are introduced in the finance track. Exit strategy to support recovery, addressing scarring effect to secure future growth, payment systems in the digital era, sustainable finance, digital financial inclusion, and international taxation. Through these agendas, the Indonesian presidency aims to engage all G20 members and invitees in discussions and deliberations that goes beyond just the interest of advanced economies. Considerations also need to be put for other countries that may still be struggling to manage the pandemic. Because coming out of the pandemic, no one should be left behind. Recover together, recover stronger.
Behold, the beauty that is Indonesia. Mother Nature's gift of serene and colorful landscapes. Where diversity makes us one, united towards a common goal. Where resiliency is achieved together. A strong infrastructure governance arising, where investments are waiting to flourish, and where creativity is inspired by tradition. Indonesia, where beautiful possibilities are offered.
Indonesia, a land of breathtaking nature and rich culture. There are many things Indonesians are proud of. One-of-a-kind photogenic spots spread all over the nation, unique wildlife, magnificent cultural heritage, and the most recent one, the G20 presidency. Indonesia is proud to hold the 2022 G20 presidency. As a multilateral forum connecting the world's major economies, the G20 holds a strategic role in securing global economic growth and stability. Together, the G20 members represent more than 80% of world GDP, 75% of international trade, and 60% of the world population. And 2022 is the year that Indonesia plays a major role in leading the G20 discussions on various global issues. Not an easy task amid a global pandemic that still continues after more than 2 years. Holding the presidency in this unique moment where countries are struggling to bounce back from COVID-19, Indonesia introduces Recover Together, Recover Stronger as the main theme of its presidency. As a step toward an even, sustainable recovery, 6 priority agendas are introduced in the finance track. Exit strategy to support recovery, addressing scarring effect to secure future growth, payment systems in the digital era, sustainable finance, digital financial inclusion, and international taxation. Through these agendas, the Indonesian presidency aims to engage all G20 members and invitees in discussions and deliberations that goes beyond just the interest of advanced economies. Considerations also need to be put for other countries that may still be struggling to manage the pandemic. Because coming out of the pandemic, no one should be left behind. Recover together, recover stronger.
Behold, the beauty that is Indonesia. Mother Nature's gift of serene and colorful landscapes, where diversity makes us one, united towards a common goal, where resiliency is achieved together. A strong infrastructure governance arising, where investments are waiting to flourish, and where creativity is inspired by tradition. Indonesia, where beautiful possibilities are offered.
Indonesia, a land of breathtaking nature and rich culture. There are many things Indonesians are proud of. One-of-a-kind photogenic spots spread all over the nation, unique wildlife, magnificent cultural heritage, and the most recent one, the G20 presidency. Indonesia is proud to hold the 2022 G20 presidency. As a multilateral forum connecting the world's major economies, the G20 holds a strategic role in securing global economic growth and stability. Together, the G20 members represent more than 80% of world GDP, 75% of international trade, and 60% of the world population. And 2022 is the year that Indonesia plays a major role in leading the G20 discussions on various global issues. Not an easy task amid a global pandemic that still continues after more than 2 years. Holding the presidency in this unique moment where countries are struggling to bounce back from COVID-19, Indonesia introduces Recover Together, Recover Stronger as the main theme of its presidency. As a step toward an even, sustainable recovery, 6 priority agendas are introduced in the finance track. Exit strategy to support recovery, addressing scarring effect to secure future growth, payment systems in the digital era, sustainable finance, digital financial inclusion, and international taxation. Through these agendas, the Indonesian presidency aims to engage all G20 members and invitees in discussions and deliberations that goes beyond just the interest of advanced economies. Considerations also need to be put for other countries that may still be struggling to manage the pandemic. Because coming out of the pandemic, no one should be left behind. Recover together, recover stronger.
Behold, the beauty that is Indonesia. Mother Nature's gift of serene and colorful landscapes, where diversity makes us one, united towards a common goal, where resiliency is achieved together. A strong infrastructure governance arising, where investments are waiting to flourish, and where creativity is inspired by tradition. Indonesia, where beautiful possibilities are offered.
Indonesia, a land of breathtaking nature and rich culture. There are many things Indonesians are proud of. One-of-a-kind photogenic spots spread all over the nation, unique wildlife, magnificent cultural heritage, and the most recent one, the G20 presidency. Indonesia is proud to hold the 2022 G20 presidency. As a multilateral forum connecting the world's major economies, the G20 holds a strategic role in securing global economic growth and stability. Together, the G20 members represent more than 80% of world GDP, 75% of international trade, and 60% of the world population. And 2022 is the year that Indonesia plays a major role in leading the G20 discussions on various global issues. Not an easy task amid a global pandemic that still continues after more than 2 years. Holding the presidency in this unique moment where countries are struggling to bounce back from COVID-19, Indonesia introduces Recover Together, Recover Stronger as the main theme of its presidency. As a step toward an even, sustainable recovery, 6 priority agendas are introduced in the finance track. Exit strategy to support recovery, addressing scarring effect to secure future growth, payment systems in the digital era, sustainable finance, digital financial inclusion, and international taxation. Through these agendas, the Indonesian presidency aims to engage all G20 members and invitees in discussions and deliberations that goes beyond just the interest of advanced economies. Considerations also need to be put for other countries that may still be struggling to manage the pandemic. Because coming out of the pandemic, no one should be left behind. Recover together, recover stronger.
Behold, the beauty that is Indonesia.
Bank Indonesia Deputy Governor Pak Juda Agong, Head of Payment System Policy Department Ibu Filiansi Hendrata, Bank for International Settlements Innovation Hub Acting Head Mr. Ross Lekau, Bank for International Settlement Singapore Centre Head Mr. Andrew McCormack, distinguished guests, shortlisted TechSprint teams, ladies and gentlemen, selamat datang and good afternoon. Welcome to the G20 Techsprint component of the Indonesian Digital Economy Festival, FACD program. We hope you've been having an enriching program so far. My name is Benjamin and I'm an advisor with the BIS Innovation Hub. And I have the privilege of being your MC this afternoon. For those of you who are just joining us now, we started this afternoon's program with the TechSprint Midpoint pitching event. And shortlisted teams were involved in this. And now we're moving on to the experts and peer learning component of the program. The G20 Techsprint is a long-form hackathon co-organized by the G20 presidencies, their respective host central banks, and the BIS Innovation Hub. This year's edition is co-hosted with Bank Indonesia and centers on the important topic of CBDCs, Central Bank Digital Currencies. This is a topic of high relevance and importance and interest, and the TechSprint is an opportunity to catalyze innovative technology solutions that would help to further the development of CBDCs. It now gives me great pleasure to invite Bank Indonesia Deputy Governor Pak Juda Agong to deliver his leader's direction. Pak Juda, please.
Very good afternoon and good morning to all of you. Assalamualaikum warahmatullahi wabarakatuh. Dear other guests and speakers, Mr. Ross Lekau from BIS Innovation Hub. Good afternoon from Indonesia, Ross. Mr. Andrew McCormack, BIS Innovation Hub Singapore. Member of Finance and Banking Commission, Indonesia House of Representatives, Ibu Anis Biarwati, ladies and gentlemen, it is great honor to welcome the distinguished guests on the Midpoint event of the third G20 Techsprint initiative. This event is held cordially with Day 2 of Indonesia Digital Financial Economy Festival, FECDI, with the relevant theme of digital currency. Distinguished guests, ladies and gentlemen, money and payment have been evolving throughout human history, influenced by technology advancement and user behavior. If we look back in 2008, one of many technological advancements that play a major role in our discussion today was initiated by Satoshi Nakamoto. Blockchain technology was introduced for the first time. Long-standing superiority of centralized fiat currency has been contested by so-called a new decentralized system in the form of algorithmic currency. This new form of money offers several advantages, such as self-governed, secure and private, easy to transfer, and cost-effective cross-border payment. But on the other hand, it has various risks, including risk of data losses, extremely volatile value, and illegal transaction. Developed by the new technology, private digital currencies have been recorded a tremendous growth over the last few years, particularly after COVID-19 pandemic era. Today, there are more than 20,000 types of private cryptocurrency worldwide. That number is predicted to continually grow over time, and the funds flowing into private cryptocurrency will also continue to grow from time to time. Hence, concern over the financial risk implication grow in line with their high market cap combined with strong adoptions. Moreover, the transition from Web 2.0 to Web 3.0 allows them to widen their use case, not only through financial space, namely decentralized finance, DeFi, with lending, borrowing, and capital market features, but also into real economy use case, namely metaverse. In this context, CBDC could play crucial role for the future financial system. CBDC may potentially be fitted to be used as a legit medium of exchange in decentralized ecosystem, a key feature which is certainly absent from our today's traditional fiat money. CBDC also needs to be able to perform as instrument to influence market incentives as well as to manage financial risk emerging from decentralized ecosystem. This is the strong motivation, strong case for central banks around the world in extending their effort on CBDC experimentation. Based on 2021 BIS survey, 86% of central bank respondents are actively researching the potential case for CBDCs, 60% of which are in the experimentation stage, and 40% has deployed pilot projects. Distinguished guests, ladies and gentlemen, while the need to explore CBDC is inevitably high for the central bank, design choices are still left unresolved. In practice, we need to understand how policy goals, practical issues, as well as technology capabilities for designing the CBDC. There are three problem statements that need to be addressed properly in designing CBDC. First, implementing effective and robust issuance and distribution. In this regard, we need to explore on how we might leverage CBDC programmability features for efficient facilitation of cash and securities transfer, as well as for delivering new innovation services to customers. Second, enabling financial inclusion. We need to explore how we might enable CBDC to provide alternative pathways for the unbanked people to open transactional accounts and participate in the formal digital economy. We also need to configure the appropriate design so that CBDCs could be well implemented not only in the urban areas, but also in the rural areas with the intermittent or unaffordable internet connectivity. Third, ensuring interoperability, interconnectivity, and integration. We need to dig deeper on how we might enable connectivity and interoperability with other CBDCs, with existing domestic payments such as RTGS, clearing system, ATM, and debit cards, including the e-money. As Peter Drucker said, the best way to prepare the future is to create it. So that the best way for the central bank to address those three problems and prepare the CBDC is by exploring, experimenting, as well as conducting pilot projects of CBDC. With this in mind, the G20 Techsprint initiative will be befitted. Under the auspice of G20 Indonesia presidency, BI Bank Indonesia and BIS Innovation Hub launched G20 Techsprint 2022 with the focus on design of CBDC. It is an international competition initiated on April 25th this year, aimed at catalyzing technological development and digitalization. It is great opportunity for bright and ambitious young individuals as well as mature and well-established firms to show off their best potential, bringing the most innovative and applicable solution. We are grateful for the positive enthusiasm by participants joining from around the world. Later on, to elaborate G20 Techsprint 2022, I would like to invite Mr. Andrew McCormack to share insight about the progress of G20 Techsprint. Furthermore, on this occasion, we are delighted to have distinguished speakers from BIS Innovation Hub who will share insight with us regarding the latest development of CBDC's project across jurisdiction. Distinguished guests, ladies and gentlemen, before closing my remarks, allow me to express my appreciation to my fellow CBDC's experts from various central banks, our colleagues from PBOC, People Bank of China, Bank of Korea, Deutsche Bundesbank, Banco Central do Brasil, Banca d'Italia, and Monetary Authority of Singapore have spared their time with us today to provide feedback on the submitted proposal in the G20 Techsprint 2022. I will stop my remarks here by quoting the words from our grandfather of the modern computing, Alan Turing, that I found to be very relevant for our today's event. Sometimes it's the people no one imagine anything of, who do the things that no one can imagine. With that being said, the G20 Techsprint event is the first small steps from a big journey in the CBDC development ahead. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Pak Judah, for the inspiring insights and helping to frame the wider context for this competition. Now, to give us a status check of the status of this competition, this global competition, I would like to invite Mr. Andrew McCormick, Centre Head for the BIS Innovation Hub in Singapore, to give us a report on behalf of the organizers. Andrew, please.
Bank Indonesia Deputy Governor Pak Judah Agong, Head of Payment System Policy Department Ibu Fili Hendarta, and distinguished guests. It's good afternoon from Bali. On behalf of the organizers of this year's G20 Techsprint, I am delighted to welcome you to this year's Midpoint event. This is the third edition of the global competition called the G20 Techsprint, which this year is organized by Bank Indonesia, the BIS Innovation Hub, at the behest of the G20 Indonesian presidency. In years prior, we've tackled themes in RegTech and SupTech and green finance. But this year, the topic at hand is, of course, Central Bank Digital Currency, or CBDCs, which is of great interest to the central banking community. The Deputy Governor has mentioned that we framed this competition around three problem statement categories: building effective and robust means of issuing, distributing, and transferring CBDCs. These are truly foundational capabilities and critical to the success of any future digital currency. In addition to these new capabilities, such as programmability of money and a platform for innovation. Enabling financial inclusion is the second problem statement. CBDCs offer a potential opportunity to deepen financial inclusion and overcome some of the barriers faced by unbanked and underbanked populations. And thirdly, improving interoperability. CBDCs can help improve and enable connections and linkages between existing and future payment systems and enhance the network effects and interoperability needed to improve cross-border payments around the world. So a little bit on the G20 Techsprint process, if I may. We basically what we do is we reach out to G20 members and we try to curate these problem statements from sort of the bottom up. In the late spring, we invited suggestions from and received ideas from more than a dozen G20 members and national authorities. And this was instrumental in helping us frame the problem statements with the greatest shared global interest and concern. Thanks to the very strong interest we received, we were also able to include within each problem statement category 2 additional challenges that we could pose to participating teams that they would solve for bonus marks as they enter the time of final judging. In late April, we launched the competition and closed registration about a month later. We received almost 100 applications from teams spread around the world. From the teams, from there, the evaluators led by the BIS Innovation Hub itself, supported by Bank Indonesia colleagues, we carefully reviewed all submitted proposals and shortlisted the 21 teams spread across these 3 problem statements that have been described. These 21 teams earlier today had the opportunity to pitch their sort of in-progress solutions and progress thus far to the panel of organizers and invited guests and experts. And this non-judging stage of the competition is really designed to give some of that interaction and collaborative spirit of the TechSprint and an opportunity for the teams to glean some feedback and perspective on their work and hopefully tune their program towards the final judging round at the end of August. So today, you're now attending the CDBC Peer Learning event, set up to facilitate even more collaboration and sharing, and insights from the BIS staff and researchers who've gleaned a lot of, done a lot of work in this space over the past 5-6 years, including surveys, studies, and of course experiments from the Innovation Hub's perspective. Following the event today, the shortlisted teams will have approximately 1.5 months until the end of August to complete their solutions and submit their proposals for final judging by judging from an independent panel of jurors convened by Bank Indonesia. Finally, the G20 Techsprint will culminate with a special finals event in October, where we will announce this year's winners. Those winners will also be invited to showcase their solutions at a variety of different platforms and showcases later this year. So I hope this presentation gives everyone a sense of the scope and magnitude of the TechSprint itself. My warmest congratulations to all the shortlisted teams who have made it to this stage, and we're very, very excited to see the outcomes and deliverables and solutions that will emerge from this competition. My sincere thanks and appreciation to our gracious hosts here in Bali and for the incredible hospitality for hosting this FECTI event. Thank you so much.
Thank you very much, Andrew, for setting the stage and giving this update. We now know what important work the teams will have to do in the coming weeks. So good luck to these teams. Next up, it is my honor to welcome the acting head for the BIS Innovation Hub, Mr. Ross Lecau, who's actually joining us live from Basel this afternoon to deliver his high-level remarks. Ross, I hope you're connected.
Deputy Governor Judah Agung, distinguished guests, ladies and gentlemen, good afternoon. It is my great pleasure to join the G20 Techsprint Midpoint event today. I would like to thank our co-host, Bank Indonesia, for their leadership and excellent collaboration throughout this year's TechSprint initiative. We are honored to have the opportunity to work with Bank Indonesia and are thrilled to make this year's TechSprint another successful edition. Since its launch in 2020, the G20 TechSprint has successfully brought together policymakers and technologists from around the world in finding new solutions to problems in the financial sector of importance to central banks and regulators. This long-term hackathon has significantly advanced the development of technological solutions in areas such as subtech and regtech and green finance. As mentioned by Deputy Governor Agung, we are now turning our focus to Central Bank Digital Currencies, or CBDC. This is undoubtedly a hot topic that is attracting a great deal of attention from central bankers around the world and also from the general public. The development of CBDCs is also an important part of the vision for the future monetary system that the BIS laid out in Chapter 3 of its 2022 Annual Economic Report that was published last month. That vision puts CBDC, both wholesale and retail, in a central position within the monetary system of tomorrow. And let me elaborate on this vision. Money, the foundation of the monetary system is money. And money is typically defined by economists as a unit of account, a means of payment, and a store of value. But ultimately, money is a societal convention. People accept money in the expectation that others will do the same. A key element of money and the financial system is trust. And public institutions, most notably central banks, are best placed to provide this trust. Money is ultimately a public good whose stability and use need to be protected by the public sector. Central banks are responsible for regulation, oversight, and key infrastructure in current systems. And of course, they are also responsible for the issuance of money. But now, central banks need to think about how to deliver on their core mandate to preserve price stability and financial stability in the digital era. And here, this is why or where they should consider introducing Central Bank Digital Currencies, or CBDC. CBDCs present an opportunity to design a technologically advanced representation of central bank money. This can ensure that the unique advantages of central bank money, safety, finality, liquidity, and integrity, are preserved in a changing world. It can also ensure that the new world of digital payments is open and competitive. Chapter 3 of this year's BIS Annual Economic Report lays out a blueprint for the new world of digital payments. At the center of that vision is a fusion of enhanced technical capabilities built around the core of the trust provided by central bank money. The metaphor that we use for the future monetary system is that of a tree. Its solid trunk is the central bank providing central bank money. It supports a rich and vibrant ecosystem of services provided by the private sector institutions and arrangements. This metaphor recognizes that the ecosystem is rooted in the central bank, the settlement of transactions on the central bank's balance sheet. Let me elaborate on the role that CBDCs would play in this vision of the future. Returning to the metaphor of the tree, CBDCs, both wholesale and retail, support branches corresponding to an array of private sector services. Central banks can issue wholesale CBDCs to banks and non-bank payment service providers that can be used to settle transactions between them. If issued on a platform using distributed ledger technology, or DLT, wholesale CBDC can incorporate new technical capabilities, such as programmability, composability, and tokenization. With such new capabilities, wholesale CBDC can support the settlement of payments and transfers in a variety of new ways. In parallel with wholesale CBDC, central banks can issue retail CBDC that are available for use by the general public. By creating an open, interoperable platform enabled by application programming interfaces, or APIs, retail CBDC can serve as a catalyst for dramatic progress in lowering the cost of payments and in enhancing financial inclusion. Moving beyond national borders, wholesale CBDC can also be joined up to improve cross-border payments. For this to work, we will need to bring together wholesale CBDCs issued by several central banks onto the same platform so that they can be traded between those central banks and large financial institutions to settle cross-border transactions, forming an alternative to today's correspondent banking system. These arrangements involve more than one central bank and hence more than one currency. And that's why they're most appropriately built on a DLT platform. At the BIS Innovation Hub, we are contributing to this vision by working actively on wholesale, retail, and multi-CBDC arrangements. We work in collaboration with a number of central banks around the world, as well as a multitude of private sector firms experimenting with different technologies and architectures. We've been investigating wholesale CBDC, both in a domestic and cross-border setting in various projects. These experiments have taught us many things: that it is possible to integrate CBDC into existing core banking systems, that the central bank can play a key role in systems based on DLT, and that multi-CBDC arrangements can support cheaper and faster cross-border payments. We have new projects coming this year. For example, we are investigating the offline use of CBDC. This may help users in remote areas or whenever internet access is disrupted. For example, during a natural disaster or a conflict. You'll have a chance to learn more about these projects from our experts later today. Turning now to the reason why we're here today. This is, of course, the midpoint of the G20 Techsprint Initiative 2022. Our midpoint event today is a key milestone in this year's edition of the G20 Techsprint. And we are delighted to co-host this event as part of the Indonesia Digital Economy and Finance Festival. Many central banks are working hard on CBDC. 4 retail CBDCs have already gone live in Nigeria, Bahamas, the Eastern Caribbean Currency Union, and Jamaica. Pilots are underway in 29 jurisdictions, and 72 central banks have communicated publicly about their CBDC work. However, there are still critical areas and gaps that need further examination. It should therefore not be surprising that CBDC is the theme of this year's Techsprint. Our intention is to contribute to global work on CBDC and to answer some of the outstanding questions with potential new solutions. Problems around building effective and robust means for issuing, distributing, and transferring CBDC, enabling financial inclusion, and improving interoperability and connectivity are some of the challenges that we have posed for the technologists, and innovators to address. We are pleased to see this year's Techsprint attract so much attention and enthusiasm. The competition has attracted exciting proposals from a diverse range of competing organizations and teams, with close to 100 participating teams from around the world. We congratulate the 21 finalists for the G20 Techsprint 2022. They come from over 15 countries. We invite them today to interact with our experts and invited regulators to benefit from their insights on the prototypes under development. The exciting part is just about to begin. Teams have the next month and a half to fully develop their solutions before the final judging by an independent expert panel convened by our co-hosts, Bank Indonesia. We encourage all finalists to continue to enjoy the truly amazing experience that is Techsprint. Let me conclude. We are on a long and exciting journey to explore technical solutions to address financial problems of today and tomorrow. The G20 Techsprint is a wonderful vehicle in which to travel through on this journey together. Today, we are halfway towards the end of the competition for this year, and I invite you all to embrace the innovative and competitive atmosphere that has developed around this year's competition. Thank you again to Bank Indonesia for such excellent collaboration in co-hosting the G20 Techsprint. We look forward to the months ahead. Terima kasih.
Thank you very much, Ross, for those rich insights and for distilling the opportunities that can arise from CBDCs. Next up, the organizers have put together a very exciting video to capture what this G20 Midpoint event is about. Please sit back and enjoy.
The development of central bank digital currency is not choice, but an inevitability. Emergence of new technologies, such as blockchain, have accelerated the development of central bank digital currencies, or CBDCs. Central banks are moving their work on CBDCs from research towards practical implementation. Their key drivers for potential issuance are shaped by local circumstances, including motivation to enhance financial inclusion and to improve the efficiency and safety of payments. Under Indonesia's G20 presidency, Bank Indonesia and BIS Innovation Hub have launched the third edition of the G20 Techsprint to catalyze the development of wholesale and retail CBDC solutions. A total of 99 teams comprised of both individuals and established firms have participated in the competition and submitted their proposals to address one of the three challenges. On 1, implementing effective and robust issuance, distribution, and transference. 2, enabling financial inclusion. And 3, enabling connectivity and interoperability. To this date, we have selected 21 shortlisted participants which have been invited today to the Midpoint event to pitch their solution prototypes and receive feedback from high-profile CBDC experts. Each finalist will also receive a cash stipend of 145 million rupiah to support in the delivery of a production-ready proposal and deployable prototypes. A panel of independent expert judges convened by Bank Indonesia will assess and select a winning team from each of the three categories in October. The winning team to each of the three problem statements will receive 770 million rupiah in cash. We welcome the shortlisted participants on this collaborative movement of synergy and innovation on CBDC in the spirit of Recover Together. Recover Stronger.
Thank you. Moving on to the next segment, we are privileged to have Enrique Cos, the senior economist at the Committee on Payment and Market Infrastructures, or CPMI, joining us virtually from Basel to brief us on the latest edition of the BIS Global CBDC Survey. This was just recently released, so this is breaking news. And to share updates on the G20 roadmap to enhance cross-border payments, particularly building blocks 19 on factoring an international dimension to CBDC designs. Enrique, I hope you're connected with us already.
I am here. I hope you can hear me.
Yeah, we can. Over to you.
Thank you very much. No, first of all, thank you for having me. Yeah, thanks again. So thanks for having me. This is really an honor to be here. It's a great show, I must say. It's super important, and I'm happy to be here. So I prepared a few slides.
Ladies and gentlemen in the room,
so if one of
we
the
actually will
colleagues
need to
can-
move
can
you to the
share
next
these slides on the screen would be great.
segment,
And
which is
also
actually
do
going
it
to take place
myself.
downstairs on
they
the
are.
showcase stage. So it's
Thank
an
you.
exciting area, but we'll move you all
So
downstairs to
I
the
must
panel as
actually
this is
say
going on.
apologies for my
There'll be
background.
ushers to
I
lead you all
tried
to the way,
upload and
but
to
you should take all your bags because
background.
the rest of the session will be taking place downstairs on a different
My
stage.
current
Thanks again,
background,
everybody.
I think it also reflects one of the key advantages of CBDCs. It's a clean slate. Every central bank, CBDCs are new to everyone. All the central banks are currently starting or designing CBDCs. And I think this clean slate really provides an opportunity for central banks to take the cross-border dimension into account at an early stage. And this is what I think CBDCs can bring compared to existing systems or making enhancements to existing systems. Okay, so enough about my background. Let's go to the next slide, please. Yeah, so let me quickly summarize some of the key results of the annual BIS CBDC survey that we conduct among central banks. So this is a survey we conduct each year to really understand the work done by central banks on CBDC and to also understand the reasons, the motivations of exploring CBDCs. So last year, at the end of the year, we did it for the 5th time. These are the results of that 5th round. And we actually had a record number of participants. So 81 central banks across the globe participated to this survey. And these central banks actually represent countries together representing over 90% of global GDP. So it's I think we really capture a good representative picture of where CBDC work is heading to. So 9 out of 10 central banks across the globe are actually exploring CBDCs, are doing some kind of work on CBDCs. And this is more than years before. What we also find is that the stages of their CBDC work is getting more and more advanced. So more than half of central banks are now really concretely building or developing or running concrete experiments. What we also found is that especially the work on retail CBDC is more advanced and also really getting into this pilot and experimental phases. Next slide, please. So what we also found is that more than half of the central banks consider it a possibility that they will issue a CBDC either in the short run or in the medium run. And this is again more than in the years before. And especially for retail CBDC, here the likelihood of issuing a real CBDC is bigger than issuing a wholesale CBDC. What we also found is that especially in the emerging market economies, there the likelihood of issuing a retail CBDC is larger than in advanced economies. The survey also learned, what we actually learned also from the survey is that the COVID pandemic, and the emergence of stablecoins and other cryptocurrencies has accelerated the work on CBDCs by central banks. And especially looking at the advanced economies, there we saw that almost 80% of the advanced economies, they said that the emergence of stablecoins and other crypto assets has really boosted their thinking and their work on CBDCs. Next slide, please. So what is driving central banks to work on a CBDC or explore a CBDC? So what we found this year is the same as previous years. The drivers really differ by country. So when we look at the red bullets, the red dots, advanced economies, what we found here is that for advanced economies, what's really driving their work is first improving payments efficiency domestically, payment safety, and financial stability. And now looking at the left circle, the green circle, what we found is that especially last year, or really this year, is that advanced economies, for them, the financial stability reason has grown significantly in importance. And this directly ties back to what we just found, is that especially in the advanced economies, the emergence of stablecoins and crypto asset has accelerated their work on CBDCs. Now, if we turn to the emerging market economies, which are the blue squares, here we find that for them, also payments efficiency, payment safety, payment stability, financial stability, they all play an important role, but it's really financial inclusion that stands out as the key reason for exploring or working on a retail CBDC. And another difference between the two groups of countries, I highlighted that with the right green circle. Am I still connected? Do people see and hear me? I'm not sure if I lost connection. I'm looking at the black screen right now. Can someone confirm if I'm still alive? Can you hear me, see me? I don't see anything. I don't hear anything.
Hi,
Okay,
NK.
just hear that I'm still connected. Okay, I don't see anything. I'm looking at a black screen.
Okay, we still see your slides and we still hear you.
Okay.
Okay.
Okay, so let me improvise then. What slide are we looking at? We are looking at the drivers, right?
We're looking at the wholesale CBDC key drivers.
Wholesale CBDC. Okay, so you know what? I just look at my, just quickly grab my slides here, and then I'll just look at my slides here on my end, and I can explain what I see, and then we could synchronize the slides. Give me 1 second. Okay, so I'm also looking here at my own slides. Wholesale CBDC. Okay, so let's continue there. Wholesale CBDC, what we see here. So here, compared to retail CBDC, it's definitely another set of drivers. And very interestingly here, for wholesale CBDC, cross-border payments efficiency is really one of the, well, it's basically the key reason why central banks are looking into wholesale CBDC. And this is really anonymous, like this is really a holds for advanced economies and emerging market economies. And this cross-border motivation actually increased in importance over the last year. So next slide, please. I'm looking now at the the key fractions that CBDCs could address from the perspective of central banks. I hope you're looking at the same slide now too. So what we did, we asked central banks who indicated that cross-border payments efficiency is a key driver for the CBDC work. We asked them, okay, what kind of frictions do you see nowadays that you think CBDCs could address? Well, this slide is really showing all the frictions that central banks mentioned that the CBDC could address. And there's actually two frictions that really stood out for both emerging markets and developing economies. It's the limited operating hours of the current systems that they think a CBDC could be beneficial to, and the long transaction change. That's another key one that central banks mentioned as a challenge that CBDCs could address. Next slide, please. So if everything goes well at your end, I don't see it, but you're now looking at a summary of the G20 cross-border payments program. So this is this broad program meant to address all the long-standing challenges in cross-border payments, which are low speed, limited access, high cost, and limited transparencies. And well, central banks clearly see a potential for CBDCs to improve cross-border payments, and that is highlighted here in this program as well. So building block 19 of the G20 cross-border payments program is really about looking at how a CBDC could be used to help address these frictions in cross-border payments. Okay, so let me tell you a little bit more about this BB19 work, building block 19 work. Next slide, please. So what has been done so far on the building block 19 work is, like last year, the CPMI the BIS-CPMI, BIS Innovation Hub, the World Bank, and the IMF, they published the first report. It's called Action 1 report. And in this report, they did a stock take on the designs, professional designs of CBDCs, and they looked at how these designs could be used for cross-border payments. Now, building on that report from last year, yesterday, actually, as we speak, yesterday, we published a second report. It's the same group of institutions, CPMI, Innovation Hub, the IMF and the World Bank. We published the Action 2 report, and this report is really about options for access to and interoperability of CBDCs, again, with the aim to improve cross-border payments. Next slide, please. So hot off the press, what is this report doing? Yesterday's report doing? So we actually go through different steps. So the first step is we identify different access options. So basically different ways in which central banks could make their CBDC available to foreign PSPs, foreign banks, and to non-residents. And we identify different options for making different CBDCs interoperable with each other. So after we identify those options, we assess these options based on 5 criteria. Based on criteria of do no harm, which means do no harm financial stability, do no harm macroeconomic situation. We look at how the different options enhance efficiency, how they increase resilience, to what extent they're interoperable with other non-CBDC systems, and to what degree they're able to enhance financial inclusion. After that assessment, we actually look at the implementation challenges of these different options. And when doing that, we actually highly benefited from the work done across the world on the various CBDC projects. Both retail CBDCs, but also wholesale CBDC projects. And in fact, the report contains a super interesting annex at the end, where we summarize over more than 10 CBDC projects, which again we used when understanding the implementation challenges of these different access and interoperability options. Okay, let me quickly summarize the few options that the different options that we identified. So let's go to the next slide. And if it's correct, you see here a summary of the 3 high-level access models that we identified for providing access to foreign PSPs. So on the one end of the spectrum, we identified sort of a closed access model. So in this model, CBDCs would only be made available to domestic payment service providers and domestic banks. And that wouldn't mean that it could not be used across the border, but it would mean that to be used across the border, they would rely on interoperability options. And we come to that later. Then next to closed access, the central banks can also decide to go for an indirect access model, where the CBDC is made available to foreign PSPs through the intermediation of a domestic bank or a domestic PSP. And the role of this domestic PSP could be different. It could be, they could be responsible for basically everything, to the transaction initiation, transaction processing, but their role could also be limited only to transaction monitoring and onboarding, for example. And then on the other end of the spectrum, we have direct access, where CBDCs are made available directly both to domestic, but also to foreign PSPs. Next slide, please. So here we see another important question that central banks need to ask themselves when they want to consider cross-border access, is namely question of who will be able to hold and transfer a retail CBDC and under what conditions. So will the CBDC be made available to non-residents, or will it only be residents that can use it? And if made available to non-residents, will there be criteria or limitations such as gaps on fees or on holdings? Or can non-residents only use it within the border of the country, or can they also use it when not actually physically in the country? These are all access questions that central banks need to consider. Next slide, please. So the next slide is a graph which summarizes the interoperability options that we've identified in the report. So very high level, we identified 3 interoperability options, reaching from compatibility, so the use of different similar standards, but still each system is completely separate, Then there's a way different ways to interlink different CBDC systems. And then there's also the option of creating a completely new single platform, a single system on which these different CBDCs are sort of run. Next slide, please. So after identifying all these options, what we do, like I said, we analyze and assess these options along the lines of the different criteria, but we also look at different implementation challenges. And it's difficult to summarize that in one slide. So what we really found is that each option has different implications. Each option has different implications for efficiency, financial inclusion, resilience, but also when it comes to implementation. Different challenges when it comes to governance, adoption, identity management. So that's why I put the scale underneath. It's in the end really a matter of trade-offs. Central banks need to trade off different factors and decide themselves what is the best option for them, given their objectives. So let me conclude. So what we really conclude is, well, like I said in the beginning, an advantage of CBDC is a clean slate. Central banks is new to all, so this is really the time to incorporate cross-border functionalities. But we also say there is an expiry date to this clean slate. We need to start collaborating at this early stage in order not to be too late. Secondly, we conclude that there's no one-size-fits-all model for access and interoperability. Central banks have different motivations, central banks have different situations. So what the report is doing, it's really providing a tool for them to assess what is best for them. Also argue for flexibility of CBDC design. CBDC designs need to be flexible in order to be able to interoperate with other CBDC models used, or access models used. It also needs to be interoperable with today's payment methods, but it also needs to be interoperable with future potential ways of paying. And next slide, please. The final slide, some considerations for future work. So one area where we think more needs to be done is really, like I said, the early stage. It's really great. It's an advantage. We need to take benefit of that, but we need to identify what exactly is that early stage. When in the process of designing a CBDC, do central banks need to make these cross-border decisions in order not to be too late? Standards also need to be something to be considered by the central bank community, thinking about standards to make sure that cross-border functionality is considered in time. Also, we actually argue for more retail CBDC experiments. There's a lot of work being done currently on wholesale CBDC, but the retail ecosystems are different. They involve different stakeholders, different implications as well, so more work is needed there. Trade-offs, like I said, like each option has different implications, and more work needs to be done on that front as well. Also looking at the macro financial implications of these different options. And finally, we conclude that it's really important to have a broad, diverse set of countries around the table, not only when talking and when having these discussions, but also when doing these experiments. Because only then we will be able to come up with solutions that is beneficial to all, that really addresses the pain points, especially also in the underserved cross-border corridors. So next slide, which is basically a thank you to all. Thanks for having me. And thank you very much. That's it for me. I'm still looking at the black screen, but I hope you all got it.
Thank you very much, Annike, for that interesting presentation and sharing the latest insights to where we are on the CBDC work front. And thank you also for improvising, even as your screen was off, but you delivered a fantastic presentation. So thank you again, Annike. Now, finally, for this last segment of the program, it gives me incredible delight to invite my colleagues from the BIS Innovation Hub to join us for what we hope would be an interactive and candid sharing of the learnings and insights from the BIS's own CBDC project experiments to date. We hope that this sharing provides inspiration for our TechSprint teams as you work through to develop and refine your solutions. We hope that these solutions will address some of the pain points and opportunities that the team will touch on during their panel. Moderating this panel is Ms. Kudruta Bor, advisor to the BIS Strategy, Innovation Hub's Strategy and Operations Unit. Kudruta is actually now joining us live from an exciting stage downstairs at the main festival hall. Kudruta, are you connected?
Thank you, Ben, hello everyone. I am pleased to be here to share insights on the Innovation Hub experiments, and I'm pleased to be joined by my Innovation Hub colleagues here in person: Andrew McCormack, head of the Singapore Center, and joining online our advisors and project experts: Oliver Sigrist from the Swiss Center, Daniel Aidan from the Hong Kong Center, Amy Zhang from the London Center, and Hashem Hassan from the Nordic Center. Welcome, everyone. So I'm going to start with a brief presentation of what the BIS Innovation Hub is. I'm going to share our key insights from our cross-border CBDC projects, and then open the floor for a deep dive discussion together with my CBDC colleagues. So if we move to the next slide, please. BIS Innovation Hub is an initiative of the BIS launched in 2019. It is designed to serve as a platform for collaboration on innovative financial technologies between central banks. We have started with 3 centers together with our host central banks in Switzerland, Singapore, and Hong Kong. And in the past years, we have been expanding to 4 new locations in Stockholm with Nordic central banks, in London with Bank of England, in Frankfurt and Paris with the Eurosystem, in Toronto with Bank of Canada, and we also have a strategic partnership with the Federal Reserve System in New York. So the Innovation Hub is not a policy shop. It works on technology in forms of proof of concepts, prototypes, or minimum viable products. So if we move to the next slide, we can see that our work spans across 6 key themes. On the next slide, please. These are SupTech and RegTech, next generation financial market infrastructure, CBDC, open finance, cybersecurity, and green finance. As you can see, CBDC and improvement in payments are our key focus area, with more than half of our projects in this space. So we are leading aspects of wholesale and cross-border CBDC and shaping aspects of retail CBDC. And soon we're going to dive deeper into these projects. So moving to the next slide. You have heard Aneka saying that CBDCs could be a way for improving cross-border payments. So Innovation Hub is working to show how this can be done in practice. And we are doing so with the following experiments. Intern Online Rock 2 in the Hong Kong Center, together with the Hong Kong Monetary Authority and Bank of Thailand. This project subsequently became mBridge when Central Bank of United Arab Emirates and Digital Currency Institute of People's Bank of China joined the project. Second, we have Project Jura in our Swiss center in collaboration with Banque de France and Swiss National Bank. And last but not least, Project Dunbar in our Singapore center in collaboration with Monetary Authority of Singapore, Central Bank of Malaysia, Reserve Bank of Australia, and South African Reserve Bank. So for the rest of the presentation, I'm going to show you how these experiments are similar, how do they differ, and what are the key insights. Let me also highlight that these projects are public-private partnerships, and at least on average, 1/3 of the team were colleagues from private sectors, including commercial banks, technology providers, consultancy firms, and in some cases, even law firms. So moving to the next slide. When we think about cross-border and cross-currency systems, there are two key features, the platform design and the access model. And today, cross-border systems were done by connecting domestic payment systems. So if we take the example of Euro area, the initial target connected the domestic RTGS system in the Euro area. However, because each central banks maintain their own software and data processing center, this became inefficient over time, and it moved to a common platform, Target 2. On access model, most of the RTGS systems do not allow access for non-resident financial institutions. The exception is the Swiss RTGS system, which allows access for non-residents. So, for example, an eligible bank in London can make and receive payments in the Swiss RTGS without having the need for a branch or subsidiary in Switzerland. So all of our projects choose to go with a common platform and to provide access for non-residents. So in the following slides, I'm going to highlight key features of the projects. So if we move to the next slide, we can see that red highlights projects that stand out for one reason or another. So Jura, Dunbar, and Enbridge were prototypes, whereas Inten Online Rock 2 was a proof of concept. The exact boundaries between a proof of concept and a prototype are a bit fluid, but basically a proof of concept shows if something can be developed, whereas a prototype shows how it can be developed. Jura tested with real value transactions, and Inten Online Rock 2 and Dunbar simulated transactions. Let me highlight that Enbridge is still ongoing, and the plan is to experiment with real value transactions. In all of the projects, the CBDC was intraday, which means that at the end of the day, it needs to be converted into reserves. But Dunbar tested with overnight CBDC with 0 interest rate. Enbridge, still ongoing, plans to test with both types of CBDCs. Dunbar and Enbridge experimented with 4 currencies, the other projects with 2 currencies. All of the projects tested different types of international payments and PVP. Jura also tested delivery versus payment because it used a French commercial paper in tokenized form. If we move to the next slide, as mentioned, they all chose a common platform upon which the central banks can issue and transfer their wholesale CBDC. Jura allowed sub-networks for each of the central banks. This is a technical construct. We can talk more later. All the experiments tested with different types of distributed ledger technology. For Enbridge, People's Bank of China is developing a new type of DLT called Enbridge Ledger. In all of the projects, non-resident financial institutions can hold and transfer a CBDC. All of the projects tested with a direct model. On top of this, Dunbar also tested with a sponsored model, which the transfer can happen only with the approval of a sponsor bank once it performs the AML and KYC checks. In Jura, the operator is private, whereas in the other central banks, the platform is operated by one or more central banks. If we move to the next slide and the last one, so the sweet spot for innovation is the intersection between desirability, feasibility, and viability. And desirability translates to public value, feasibility is about technology, and viability about the business model. So the public value of a common platform that allow access to non-residents is better cross-border payments and cross-border securities. On the feasibility, all of our projects show that it is technically feasible to share a common platform. And on top of this, it has benefits such as lower cost, faster settlement, and increased operational transparency. But however, to move to next stages, there are questions such as scalability, performance, securities that have to be answered. And one remaining question is, are these models viable? There are governance and control, regulatory and legal requirements questions that have to be answered. And with this, I will stop my presentation and go with my colleagues to dive deeper into some of these aspects. And I'll take advantage that Andrew is here with me. And Andrew, we saw that experimentation can help because multiple requirements become obvious once central banks come together and compare their needs. And we also see that governance is still one of the remaining questions. So based on Dunbar's experience, what governance mechanisms could be put in place so that central banks are comfortable to share such a common platform?
Thank you, Kadruta. So yeah, I mean, the work we've done on multi-CDBC arrangements through Project Dunbar has really helped kind of evolve our thinking in this space. I mean, if you step back for a second, what would it take to have multiple central banks share a platform? There's some table stakes that obviously have to be in place, one being security. That's a primary concern, and the political will to actually do it. So, you know, if you set those things aside, from a technology perspective, the platform has to have kind of a universality of features and capabilities. That's the first thing, that central banks have to have the capabilities in place to manage their own issuance and redemption of their currencies, et cetera, et cetera. From a governance perspective, the rules and policies also have to be in place to allow for access and participation to work, and that includes what the governance of the platform itself would even look like. So decision-making powers, and how do the stakeholders involved in what is an FMI actually to operate? And these are actually really complex questions. I mean, in Dunbar, we weren't necessarily prescriptive at this point. It's still very early. And that's kind of something that we're interested in pursuing in further evolutions of our work. But what we did learn is that good fences make good neighbors when it comes to shared platforms. Obviously, there has to be a baseline of capabilities that everyone has access to, but the ability to have autonomy and control over your domain areas, over your issuance and sovereignty of your own currency is critical. The ability to kind of localize policy elements like currency controls and CFMs that every country approaches very differently. And obviously data privacy and security concerns are also different amongst different jurisdictions. And so the feature set, there's the governance from a legal perspective, the governance from an operational perspective, and then having a kind of rich feature set that allows for localization of different kind of parameters and configurability of those parameters to be willing and able to participate. So I'll stop there.
Thank you, Andrew. So exciting work ahead for Project Dunbar. So now I would like to turn to Oliver, who is representing Project Jura. So Oliver, we saw that Project Jura was conducted in a near real setting and experimented with real transactions. So can you give us a bit more details on what does this mean and how the actual experiment took place?
Yes, of course. Thanks, Kadruta. So there are, I think, this near real setting is characterized, I think, by three key elements. So one is the central bank control over wholesale CBDC. So like we heard before with Dunbar, Jura was conducted on a common platform. But in contrast to other experiments, this platform was actually operated by a private entity. So this, of course, for a central bank raises many questions around controls related to its own CBDCs. And you mentioned that before in your presentation, Kadruta. So to assure these central bank controls, we deploy these subnetworks or business networks on this common platform, and actually these business networks helped to assure central bank control over its own CBDC. Now, an important feature of this is also that these subnetworks were deployed in the respective jurisdictions, providing an additional layer of control to central banks. Now, the second element to this near real setting was that we conducted real value transactions. So for the purpose of the experiment, we issued a commercial paper with a face value of 200,000 euros. And we settled this against wholesale CBDC in delivery versus payment transactions. We also tested, besides the DVP transactions, we also tested payment versus payment settlement, so Swiss franc wholesale CBDC against Euro wholesale CBDC. And given that we tested these real value transactions, we also required backup and crisis arrangements, and the involvement of actually a variety of business units in the different commercial banks that participated in the experiments. And in addition, the experiment was underpinned by a rule book governing the legal relationship between the private participant. That was one aspect that was defined in the rule. Now, on the third element, very quickly, I think this is, I guess, the element that binds the previous two together, is that legal and regulatory analysis showed that actually this setup is workable in today's framework, legal and regulatory framework. So you could actually do these or settle these transactions using wholesale CBDC on such a platform that is owned and operated by a private entity. But of course, there are also limitations to our approach. So, for example, given that we were in this near real setting, for example, we could only achieve finality of payments in RTGS systems, and because of that, we still rely on correspondent banks to settle payments, and this, of course, introduced an additional layer of complexity. But let me stop here.
Thank you, Oliver. And let me go now to Daniel. And we saw that our project experimented with different types of distributed ledger technologies. So can you give us a crash course in DLT? What are the benefits? Why should we run a common platform on DLT? And what are the implications of choosing one type of DLT over another?
Okay, thank you, Kadruta, and thank you, Andrew. It's very nice to be here. So a quick crash course in DLT. So maybe I'll try to relieve some of the myths around DLT. So DLT stands for Distributed Ledger Technology. And I would say that that's an umbrella term that contains blockchains within it. So every blockchain is a type of distributed ledger, but not every distributed ledger is necessarily a blockchain. I think the first thing to know is that distributed ledgers and blockchains need not be associated with public crypto solutions necessarily, but they're kind of a fundamental building block that a lot of the crypto solutions leverage. So DLT and blockchain sit in a very different space than public permissionless crypto at large. You know, when you look at the projects that Kadruta mentioned at the beginning of the panel, a lot of these they all leverage distributed ledger technology. And in particular, the reasoning for that is because of when you work in a cross-border setting, distributed ledger technology lends itself well to an environment where you have modular architectural pieces that need to be governed and developed by different stakeholders, and they distribute a lot of the requirements across multiple different components of a system. So distributed ledger technologies are not a prerequisite for central bank digital currency per se, but in cross-border environments where you have a distributed set of stakeholders, they lend themselves nicely to implementing solutions with those type of requirements. Maybe a couple of quick things talking about kind of implementation choices. Different technologies will capture trade-offs between different components differently. For example, the need for privacy is often contrasted with the need for transparency. So for regulated solutions, you generally want some degree of transparency, but at the same time, for retail users in specific economies, you want a varying degree of privacy. So those two things are often implemented in different ways through different technologies, and the choice of distributed ledger will find a balance between those two things. Another great example of two things that are often contrasted with each other are the distribution, how distributed and decentralized a blockchain model or a DLT model is versus how interoperable the model is. So to make something interoperable, you can center it all in one spot, and then, well, every component of that system can talk to every other component of the system. On the other hand, if you distribute it and maybe put certain kind of firewalls in between the different participants, or in between different different functionalities, well, then interoperability can become more challenging, because you ultimately have systems that maybe don't talk to each other, or maybe have different points of settlement, or things like that. The thesis, though, around using distributed ledger technologies, I would say, really manifests itself in two main components. So the first one I've hinted on, it's this notion of distributing a system. It helps with governance. It helps building modular architecture that you can split up different components within different regions in a way that gives central banks the confidence to issue their currency onto the platform, to control the ability of their financial institutions to custody these different assets, and things of that nature. The other aspect that I think is important to mention is this notion of tokenization. You heard it in Oliver's description of the Jura experiment, both in terms of the distribution, but also in terms of the tokenization. When Oliver mentioned atomic swaps and delivery versus payment, the tokenization idea is that once you put something onto a distributed ledger, you can represent it on a common set of rails, independent of what it is the underlying asset entails. So, for example, the commercial paper in Jura and the Swiss CBDC or the Euro CBDC have the same representation on the blockchain, and that allows you to interlink the transactions in a way that's atomic and instant, meaning that the two legs of the settlement will settle if and only if the other leg of the settlement, the other leg settles as well, meaning that you can reduce settlement risk to an absolute minimum. This is incredibly, incredibly significant in cross-border contexts. So the tokenization thesis at large and the modularity of design and distributed components and architecture and governance really lend DLTs or blockchains well for a cross-border multi-stakeholder environment. So I hope that that's a brief intro to some of the tech.
Thank you, Daniel, for summarizing so rich information in less than 5 minutes. So we have heard so far the voices of Dunbar through Andrew, Enbridge through Daniel, and Jura Oliver, but we are conducting, as I mentioned before, projects also on retail CBDC. So I would like to invite Amy to tell us about Project Rosalind. What problem are you trying to solve, and how the solution design looks like?
Thank you, Kajuta, and good afternoon, everyone. It's really nice to be here. In the London Centre, we're working on Project Rosalind. So Project Rosalind is a retail CBDC experimentation that we're working with the Bank of England. What we're aiming to achieve here is to build a set of prototypes of an API interface that can be used to distribute CBDC and also to enable CBDC transactions. The project, in the way, it is kind of based on the idea of a indirect distribution model where the public sector could provide the kind of the basic infrastructure, for example, an API platform, and for the private sector to build consumer-facing applications on top of that. Therefore, I think what we're hoping for is that this could be achieved through a very close collaboration between the public and the private sector. And through this project, what we are aiming to achieve is to kind of explore deeply some of the key questions on retail CBDC. For example, account and token-based setup, programmability, and also kind of thinking about how could the API platform be scalable, extendable, and future-proof? How can the CBDC system could be built with maximum interoperability and connectivity, and how it could enable innovation and adoption? And together, how can we build a diverse and robust ecosystem around a retail CBDC system? Just on the kind of the last point on the kind of concrete output we're hoping to deliver for the project, I think there are 4 things. Firstly, a set of API prototypes that we can demonstrate the API functionality. Secondly, we wanted to publish a set of API specifications and standards. Thirdly, we wanted to host an event to showcase not only what we have created and built, but also the solutions that our private sector co-creators have developed to support their own CBDC use cases, and we will in due course inviting the ecosystem to participate in that event. Finally, we're really hoping can publish a report to share our learnings and insights from this experimentation. And I will stop here and hand over to Kujuta.
Thank you so much, Amy. Hashem, I would like to talk to you now. So financial inclusion is one of the problem statements of this year's TechSprint, and offline capability is often cited as a key feature for a CBDC to enhance financial inclusion. And I know that at Nordic Center, you do have a project that looks at this aspect. So can you tell us a bit more about Project Polaris?
Yes, of course, and thank you, Kotruta. I will just give a brief introduction to Polaris, and then I will get back to the financial inclusion questions. So the goal with the Project Polaris is to holistically think and learn about requirements to implement and operate CBDCs in an offline context, but taking a cybersecurity and resiliency-first approach. So the project will focus on 3 different views, the solutions, scenarios, and architecture. And with the solution view, we will look at how different types of offline solutions could be deployed, how secure and resilient they are, how they scale, the readiness, but also the advantages and disadvantages of these solutions. And then we will look at the scenario view, where we'll consider the applicability of offline solutions and how they support a number of scenarios. These scenarios could be national emergencies such as cyber attacks or natural disasters, but also a scenario such as a post-quantum world, also looking into seamless retail use, but also inclusion and accessibility. And then the last view will look and consider both the solutions and the scenario-based views, but determine the architecture and the design requirements necessary to operate a secure and resilient CBDC platform, thus enabling us to conduct these offline solutions and deploy them, and how also they could work seamlessly with online capabilities. And hopefully we will be able to share these learnings and insights in reports and papers. Back to your question on how this could support financial inclusion. I would say offline solutions could and would be able to support financial inclusion in several ways. For example, offline payments could enable users in low or no connectivity areas to complete transactions without having access to internet or electricity. And these types of transactions would enable users who's currently outside of the financial system to access the financial systems, to access financial services, such as payments, savings, or even creating a credit history. But I think we really need to bear in mind that this by itself is not enough. Just because a payment is offline, that wouldn't mean that it will increase or support financial inclusion. Different groups of people and different countries will need different solutions. And so there's really no one size fits all. I think the really important thing for financial inclusion here is that the solutions are affordable and they're accessible. or else we can end up with some solutions that will only work for the few. And this could be in the case of an offline solution requiring expensive hardware, limiting the use of this solution. So I would say yes, it could. Offline solutions could support financial inclusion, but they will also need to meet local requirements for the, affordability and accessibility.
Thank you so much. So we have only a couple of minutes left, and let me quickly check if there is, if we have any question from the audience. If not, I'm going to use the last couple of minutes to ask each of you the same question, and I want you to answer using one or max 2 words. So what's next for CBDC, for your experiment, or for CBDC in general? And Daniel, I'm starting with you.
2 words. Minimum viable product. I guess that's 3 words. MVP.
But I accept it. Thank you. Amy?
Two words might be a bit difficult. I think for me would be development starts. So that's our next step. We're not looking to the big things yet.
Oliver?
I will use more words. Is integration of trading and settlement.
Thank you. And Hashem?
I would say that we need to explore and identify the right advantages and disadvantages in this solution. I know there wasn't 2 or 3 words.
Thank you. And finishing with Andrew?
A lot's been said here. I'd say from an innovation hub perspective, it's collaborate and synthesize. A lot of work's been done, and I think we need to kind of play our role and bring a lot of these learnings into focus.
Thank you so much. And with this, I think we're ending our panel. Thank you, my colleagues, for their time and insights on their projects, and hope to see you in Bali at some point. Ben, over to you.
Thanks very much, Kodruta, and thanks, team. That was a great panel, and I certainly learned a lot. I hope everybody, had some nuggets of takeaway too. And, like all good things, we have to eventually wrap up. So with this, now we end, the peer learning segment of the G20 Techsprint Midpoint event, and also today's, in fact, CBDC-focused day of the FACD conference. We've been doing so much today, and there's so many takeaways. I was asked to try and distill 3 lessons. There are a lot more lessons than these 3, but if I had anything to sort of summarize, I would have taken these 3 nuggets away. Firstly, there's a lot of interest and potential in CBDC. People want this. We were doing a lot more experiments. We're doing work. So definitely keep, coming up with good solutions, ways to make this work and viable and feasible. There's also a lot of sort of recognition that there's no one-size-fits-all. Each jurisdiction needs to make its own sort of assessment of how suitable and viable these new technologies are in their context. But definitely there is, like we said, back to point 1, there is great interest. And so we hope that these things will help spur it. And then, from a TechSprint point of view, if there's anything we've learned is, the collaboration and partnership that the private sector and the public sector can do together is tremendous. There's a lot of innovation, a lot of good ideas, a lot of effort going into that. And so just to stay tuned to this space. A lot of things will happen, and I'm very sure, just look out for these solutions to help bring us to the next level of work implementation. So with this, it now leaves me to thank everybody once again for joining us this afternoon. I hope it was time well spent, and everybody got things to take away and learn. To the TechSprint shortlisted teams, I wish you all the very best in the next month and a half. You're going to have to work very hard, but we're looking forward to seeing your final solutions. For organizers, we're excited to see what comes out. And of course, a big thank you to all the organizers, our colleagues at Bank Indonesia and all the other partners today for putting this fantastic, amazing, festival together. We wish everybody connected could join us in Bali, but it's been a tremendous event. So thank you very much. Thank you for the hospitality in Bali. Terima kasih, everybody. Thank you, and good evening, good afternoon, good morning, wherever you're connected. Have a great day, everybody. Thank you very much.
So everyone, please once again give applause for our last speakers today. So that's the last talk show that we held today in the second day of this festival. Once again, I would like to say thank you so much to Mr. Benjamin Lee and then Ms. Kodruta, and all speakers who joined us on the previous session. Yay! And we would like to welcome in as well to Deputy Governor Bank Indonesia, who joined us here, Mr. Juda Agung. Thank you for joining us, and Ibu Fili as well, who already here together with us together. Well, ladies and gentlemen, so today that's the last talk show, but the day is not over yet because we have a special performance as well by Gusteja, and it will start at 5:30. So make sure you are here and close the day with this amazing performance. And while we're waiting for the next performance, so please enjoy this video.
Kerja keras tanpa libur demi dapat uang lembur, banyak dikit tetap nabung, bunga tinggi cair harian pakai neobank buat semua.
Urus anak, tugas banyak, tagihan rumah juga banyak, beli ini bayar itu semuanya jadi satu pakai neobank.
Dagang offline, dagang online, kalau minat DM aja bang. Transfer gampang, bayar gampang, gratis biaya antar bank pakai neobank buat semua. Mau ini mau itu semuanya jadi satu pakai neobank buat semua.
Nama Niputu Sriani, alamat Banjar Munduk Kemoning, lama bekerja 7 hari. Nama motif dengan nama sertifikat HKI, Songket Negara Bunbunan Putri Mas. Songket negara bunbunan adalah songket negara tanpa sambungan dengan pewarna alam dengan motif bunbunan seperti semak belukar atau bunga merambat. Sambung menyambung tidak putus. Bunga merambat ini banyak tumbuh di daerah Jemberana. Bahan benang, metris, warna alam. Penyelesaian songket negara ini antara 20 sampai 30 hari.
Bank Syariah Indonesia.
Siapa kita? Kita mungkin orang biasa. Bagian dari 80% teori Pareto. Bukan CEO unicorn, dekakorn, atau dragoncorn. Bukan cover majalah 40 orang sukses under 40, atau mega influencer. Buat bikin perubahan, nggak harus jadi orang lain. Perubahan dimulai dari diri sendiri. Siapin hari esok, mulai hari ini. Mulai ubah ide, jadi kenyataan. Mulai langkah ke depan penuh keberanian. Tomorrow, bank digital yang bantu wujudin mimpimu, siapapun kamu. Make the change. Make tomorrow yours.
Dal, haus nih. Jalan dulu yuk.
Mau jajan apaan sih, J?
Iya, lu kan janji menraktir gue.
Kapan? Emang gue pernah janji menraktir lu?
Suka pura-pura lupa lu ya. Gue tuh gak pernah lupa dalam traktiran.
Ya udah, iya, ayo. Tapi cari yang promo ya.
Yeah.
Sini, J. IT nih jadinya. Serius, yakin?
Iya.
Mbak, IT 2 ya. J, pindah yuk.
Kan udah mesen.
Ini J, di sini biasanya bayar pakai OkePay. Gua kan pakainya OVO. Mana gua nggak bawa mangkes lagi. Gua dulu ya. Mbak, sebentar ya.
Yalah, Dal. Mau lihat ya.
Serius?
Mbak, udah ya?
Kok bisa sih, J? Lu bukannya pakai Ajeling ya?
Bisa dong, lo lihat deh. Tuh, ada logo Krisnya, artinya sistem aplikasi, Dal. Udah ya, Mbak? Ya, terima kasih. Dal.
Thank you.
Makasih ya, Mbak.
Makasih ya, Mbak.
Seger banget, Dal.
Kan main, J. BTW, makasih ya.
Kok makasih? Lah iya, kok jadi gue yang naktir?
Pastinya kita semua udah tahu dong sama yang namanya Quick Response Code atau yang biasa disebut dengan QR Code. Itu loh, teknologi yang memungkinkan kita untuk menyimpan informasi dalam bentuk kode yang mirip dengan sekumpulan titik hitam. Kayak gini nih. Dulu, untuk baca kode QR ini perlu aplikasi khusus. Tapi sekarang, dengan zaman yang semakin canggih, cukup dengan menggunakan kamera handphone, maka informasinya langsung muncul. Canggih kan? Nah, sekarang kode QR banyak dipakai untuk keperluan luas. Salah satunya sebagai alternatif cara pembayaran. Contohnya nih, kalau kamu pergi ke mall, banyak kan promo-promo makanan dan minuman favorit kamu? Itu bayarnya pakai apa? Berhubung di Indonesia udah makin banyak sistem pembayaran yang berbasis online, maka tiap sistem pembayaran tersebut juga punya kode QR yang berbeda-beda. Kalau sebuah toko atau merchant menerima 4 sistem pembayaran, maka ada 4 buah kode QR yang berbeda-beda juga. Contohnya, seperti yang sering kita lihat di beberapa toko. Pas di kasir, kayak banyak tuh berjajar berbagai macam sistem pembayaran yang kayaknya menuhin meja si kasir. Malah jadi repot kan? Makanya, Bank Indonesia ngebuat suatu standarisasi yang berlaku untuk semua sistem pembayaran berbasis kode QR yang ada di Indonesia. Sehingga kode QR yang tadinya eksklusif alias cuma bisa dibaca oleh si penerbitnya aja, kini jadi lebih inklusif alias dapat dibaca oleh penerbit yang lain. Ini namanya Quick Response Indonesian Standard atau disebut KRIS. Tapi jangan salah, kris ini bukan jenis aplikasi atau instrumen pembayaran loh ya. Karena kris adalah semacam interface. Jadi, pembayaran yang menggunakan scan QR tetap pakai aplikasi dompet elektronik, mobile banking, atau uang elektronik berbasis server. Gampangnya gini, kalau untuk kartu ATM, kita punya gerbang pembayaran nasional atau GPN. Nah, kalau untuk kode QR, kita punya kris. Lalu, kelebihan dan manfaatnya apa? Seperti yang udah dijelasin sebelumnya, karena kris ini bersifat inklusif, jadi semua lapisan masyarakat bisa pakai. Mulai dari pedagang kecil sampai ke merchant-merchant yang ada di mall. Karena nggak perlu mesin edisi yang banyak, jadi nggak membutuhkan modal yang besar. Nantinya, nggak akan ada lagi tuh toko-toko yang mejengin kode QR yang berbeda-beda sampai berjejer penuh kayak gini. Nggak cuma itu, standarisasi ini juga sebagai antisipasi dari tindak kriminal, seperti penipuan dan scamming yang marak terjadi di luar sana. Dengan hadirnya kris ini, nggak cuma untuk mempermudah dan melindungi kita sebagai konsumen aja, tapi juga menciptakan kompetisi yang sehat antar penyedia barang dan jasa atau si merchant tadi. Jadi, mau kamu jajan di mall sampai jajan di pinggiran, bisa tuh bayar pakai kris. Bakso. Tukang bakso, jadi pengen jajan. Bang, tunggu bang.